Hello everyone. Let's have a discussion on May and November 2020 RTP of CA Intermediate Accounting Paper of Insurance Claim Chapter. Starting with first question, a trader intends to take a loss of profit policy with indemnity period of 6 months. However, he could not decide the policy amount. From the following details, suggest the policy amount. Turnover in last financial year 36 lakh, standing charges in last financial year 7,20,000. Net profit earned in last year was 10% of turnover and the same trend expected in subsequent year. Increase in turnover expected 25%. To achieve additional sales, trader has to incur additional expenditure of 50,000. So we are supposed to find the sum assured that he should take the policy for. But before beginning to find out the policy amount, we should know what all components are involved in this loss of profit policy. That is, if he plans to take up this policy, what all are the losses or things that are going to get covered for him? What are the risk coverage he is getting on? So those 3 points or those 3 components of a claim under loss of profit policy are first and foremost being loss of profit. When a business faces a fire in its premises, they will have to they end up having a business disruption period where they couldn't perform the business activities as in usual days. So during that period, he could end up losing some sales, and by losing sales, he end up losing some of the profit that he was planning to earn out of those sales. So that is the first and foremost component of this claim. As the name suggests, we are trying to cover for the profits that he is ultimately losing because of this fire accident in his business. But this claim or policy doesn't just cover that, it also covers any fixed expenses that the business still has to incur even when the business has a disruption period. And the entire fixed expenses are not covered as part of this claim, but only those portion of fixed expenses which are insured while taking up the policy. And the third one is, even though there is a business disruption, he couldn't continue in the same premises or with the same usual mode of working, same production line or same production units. He couldn't end up doing all those things. He still will try to come back on track and at least achieve some of the targets that he was planning in his mind. So to ensure that some of those targets or dreams of his are fulfilled, he will have to incur certain additional expenses. Example maybe like a rent of a new place that he has to take for few days for alternate space wherein he could revive the production activities, maybe appoint or take in few more laborers who will help in fastening the production activity so that he can produce more than the usual. Yeah. So all those things will result in an additional expense that he has incurred during this business disruption period in order to ensure that he can at least save some amount or at least have some sales in his business. So for those additional expenses also, claim is provided to a limit. Now, all those things are covered in detail when you learn about how to compute claim under loss of profit policy. But this question is asking us to find the policy amount. And in policy amount, we will have to know what are the components that generally get admitted as claim under this policy. Why? Because these 3 components then should also be considered by the trader in fixing the policy amount. He should ensure that all these 3 components are looked upon when I decide on the policy amount. Then only I can ensure that my risk is covered to the maximum. So starting with first component being loss of profit. The question says last year's turnover was 36 lakh and increase in current year when he is actually planning to take the policy is 25%. So which means his turnover in current year should be 36 lakh into 25%. Sorry, 36 lakh plus 36 lakh into 25%, which is 45 lakhs. So in current year when he is taking the policy, he is going to get 45 lakhs as expected turnover. Yeah. Now, how do we compute the loss of profit? So, if his expected turnover is 45 lakhs, we have to compute how much is the profit that he will end up losing if he loses the sale of 45 lakhs. Now, what profit are they talking about? It is not net profit. but it is gross profit that the claim is actually talking about, or loss of stock policy talks about. So we have to compute the gross profit that he will lose, or he'll end up losing, if his expected turnover of 45 lakhs is lost by a fire accident. So to compute GP on expected turnover, and expected turnover is 36 lakh was the previous year's turnover. On that, 25% increase is expected. So we can say the expected turnover during the period in which he is planning to take the policy is 45 lakhs. On this, we have to compute how much is the profit that he will end up losing if at all a fire accident occurs. So for that, profit means gross profit. So how much is the gross profit? Is it given to us? In the question, it is talking about net profit in previous year, 10%, but it doesn't talk about gross profit. So can we apply net profit which is given in the question? No, we still have to apply only gross profit, because that only will get admitted in loss of profit, loss of profit policy as claim. So how do we compute the gross profit percentage on these turnover on in this business? For that, let us take up a working note quickly. Gross profit ratio computation. So gross profit, as we study the claim steps under loss of profit policy, we know that gross profit is redefined as net profit plus standing charges. Not only standing charges, sorry, not just standing charges, it is insured standing charges. Yeah, divided by turnover into 100. So that is GPR that we have learned as part of claim computation under loss of profit policy. So here, if GPR is net profit plus insured standing charges divided by turnover into 100, then we can say that the gross profit is redefined as net profit plus insured standing charges. And then, can we find out the GPR of previous year? Yes. Why? Because we have all information that is required for this formula. So therefore, GPR we can say as net profit in previous year. What was the net profit in previous year? It was said that previous year they had a net profit of 10% of turnover. So if turnover is 36 lakh, net profit being 10% of turnover, we can say that net profit in value is going to be 36 lakh into 10% plus insured standing charges. That is what should get added to finally arrive at the gross profit. But here the question doesn't say whether the standing charges are insured or not. But to ensure that the trader gets the maximum benefit of risk coverage, we will consider the entire fixed expenses to be insured. That is an assumption that we will have to take up. Only then we can say that he gets the maximum coverage of risk if at all a fire occurs in his business. So standing charges, entire 7,20,000 gets added, divided by turnover. What was the turnover in previous year? 36 lakhs. So 36 lakh into 100. So what is the GPR? 10%. So 3,60,000 plus 7,20,000 divided by 36 lakh is going to be 30%. So we have arrived at a gross profit ratio of 30%. So we can say that since all other conditions are same of the expected future year, if last year he has earned a gross profit of 30%, in this year also he is going to earn a gross profit of 30% had this business not faced a fire accident. So therefore we can apply this 30% which we have computed in this working note. So therefore we can say the expected loss of profit on this expected turnover of 45 lakh is going to be 13,50,000. So we have now covered loss of profit. Have we just covered loss of profit? No, we have also covered fixed expenses, because Even though when you learn about the theory of claim under loss of profit policy, we talk about these 3 points. But even then, the steps involved in the claim computation tells you that loss of profit arrived is actually a combination of the gross profit plus insured standing charges, because in normal situations you'd never add this insured standing charges in computing GPR, but that is a special computation for this type of claim alone. So therefore we can say this loss of profit ultimately that you have found out is nothing but a combination of the gross profit as well as insured standing charges, because just because insured standing charges was in the numerator, you ended up getting a GP of 30%. So if you eliminated this 7,20,000, you will get a different GPR. So that itself is an indication that the amount that what you have got as 13,50,000 as loss of profit is a combination of both the profit element that he might lose and also the fixed expenses. So we have covered both the points mentioned as first and two. So we have left only the third point, which is claim for additional expenses. And here also the claim for additional expenses are given to be 50,000. Yeah. So in general claim computation, when you see how much should be admitted as additional expenditure claim, you have certain steps to follow. But this question is not asking us to find the claim, but to fix on a sum assured or policy amount. So therefore, same logic we will apply as we have taken for standing charges, that if I had incurred or if I incur 50,000 additional expenditure, the maximum benefit I get as risk coverage only if I take the entire 50,000 into consideration for arriving at my sum assured amount. If not, if you take something lesser, your risk coverage again comes down. To ensure that maximum risk coverage is possible to this trader, he'll take up the entire additional expenditure in computing his sum assured amount. So with that, we arrive at an amount of 14 lakh, which we can say that the trader can fix as his sum assured or policy amount for loss of profit policy. So this is the answer to this question. Yeah. So we already have the 3 components mentioned, but in line item GP on expected turnover 13,50,000 has both the profit and fixed expenses component added up together, and then claim for additional expenses are shown as another item, and together it will come to 14 lakh, which will cover all these 3 points. But in reality, or in actually when the year comes and if he faces a fire, we cannot say that entire sum assured 14 lakh is going to be received by the trader as a claim. That can differ. Then you will have to consider many other certain things, whether the entire standing charges was this much, if there was a savings in standing charges, all those things will come into picture when you're going to compute the claim. But this is not such a question. This is a question asking you to find out how much should be the sum assured that he should put forward or take up when he's planning to take a policy. So I hope that this question is clear. This question will become much easier if you are very thorough with all the steps under claim of loss of profit policy and all of the theories which we had discussed briefly at the start of this question. Yeah, so let us now move on to the second question from loss of profit or loss of stock policy chapter, which is Shyam's godown caught fire on 29th August 2020 and a large part of the stock of goods was destroyed. However, goods costing 54,000 could be salvaged. The trader provides you the following additional information. Cost of stock on 1st April 2019, 3,55,250. Cost of stock on 31st March 2020 is 3,95,50. Purchases during the year ended 31st March is 28,39,800. Purchases from 1st April to date of fire. Cost of goods distributed as free samples for advertising. Cost of goods withdrawn by the trader for personal use. Sales for the year ended 31st March. Sales from 1st April to date of fire. Shyam had taken the fire insurance policy of 2,50,000. Now this question, 2,50,000 is the sum assured. In first question, this was the amount that we had found out, with an average clause. Calculate the amount of claim that will be admitted by the insurance company. Consider that the rate of gross profit up to date of fire is same as that of previous accounting year. So based on the questions pattern or the particulars or information given to us, we can understand that this is a loss of stock policy and we are supposed to find out how much will be the claim admitted under such a policy. Yeah, so let us take a question number 2. So the first step under loss of stock policy claim is to find out the GPR of previous year, because that is the base for us to find out what will be the GP of next year and going forward, or when the fire occurs. So in some cases, previous year's GPR will directly be given. In some cases, it will not be given. We will have to find it out. This question is such a question wherein we will have to find out what is the GPR of previous year. To find out the GPR of previous year, they have given us certain information which will assist us in finding out that ratio. So let us before that find out what is the date of fire. The date of fire was 29th August 2020 and all the particulars given are for the year ended 31st March. So we can say the financial year that are being considered are 1920, that is April 1st 2019 to March 31st 2020, and the fire occurred on 29th August. So the next year in which the fire occurs belongs to financial year 2021, and we'll have to consider the transactions from 1/4/2020 to the date of fire, which is 29th August 2020. So these are the two financial years involved. So please bring that into your mind before taking up the question. It is not necessary to write it on the face of your answer as this. I've just written to ensure that it is understood by all. So the first step is to find out the previous years, that is the year prior to the year in which the fire has occurred, to find out the GPR of that year. Let us do that now. So to find out GPR of financial year 1920, I'm going to open a trading account. That is going to be my first step. Step 1, trading account for the year ended 31st March 2020. Opening stock is given on 1st April 2019, 3,55,250. Opening stock 3,55,250. Then we have purchases during the year 28,39,800. We also have certain free samples and withdrawal, but that is all part of the second financial year 2021. So we need not consider it in first trading. Sales is 40 lakh in that year. So by sales 40 lakh. We are also given the closing stock. That is 3,95,50 rupees. 3,95,50 rupees. So now we do not have any other direct expenses, so we can find out the gross profit as a balancing figure and then find the GPR. So GP is the GP is 12 lakh rupees. So now that we have found out the GP in value, let us find out the GPR of previous year. So 12 lakh divided by sales 40 lakh into 100. So that is 30%. Now the question says, to find out the claim under loss of stock policy, consider the same gross profit ratio as in the previous year. So which means for the year 2020-21 also, to find out the stock that were actually destroyed due to fire, we have to consider the same GPR of 30%. That is, you do not have to make any adjustment. So let's move on to the next step, which is step number 2, memorandum trading account. And the name given is not trading account because the year isn't complete and we are only recording transactions from the start of the financial year in which the fire occurred till the date of fire. So it is not entire 12 months, hence the name memorandum trading account. So memorandum trading account from 1/4/2020 to 29/08/2020, and this has to be clearly written because this is the major part. From here, we are supposed to find the stock that were actually destroyed. So these dates are very important. Make sure that you write it clearly. Starting with the opening stock, and this year's opening stock would have come from the previous year. So from previous trading account, we can record 3,95,050. Along with that, we have to record the purchases during this period from April to August, and that information is given to us as purchases from 1st April to date of fire being 16,55,350. But do not write the amount directly into outer column because we have certain adjustments to it. Now this part you can either record it as a working note altogether, or if you want, you can clearly and cleanly record it within the memorandum trading account. That is well and good enough. So free samples shouldn't be considered as a purchase item. It shouldn't belong to trading account and shouldn't affect my gross profit. It should be moved from purchases account and debited to profit and loss account as an advertisement expenses. So that is what we are doing now. So free samples cost were 20,500. So that I am removing from this purchases and I'll debit it to the P&L account, but that portion is not required for this question. So therefore only the removal part will be shown by us. Yeah. And the next is cost of goods withdrawn by the trader. That means personal, for personal use, he had made some drawings and that will be treated as a drawings and it will get adjusted in capital account if at all we had to prepare. Now we do not have to prepare capital account, so we'll only show the effect of reduction from purchases account. So the cost of such goods is 1,000 rupees. So minus drawings. 1,000. So therefore, my resultant purchases is going to be 16,33,850, which should actually be recorded as purchases in my trading account, ultimately having an effect on my gross profit. The other two items which we have deducted will go to, one will go to the balance sheet and one item will go to P&L account. So we have recorded the actual purchases. Then we have sales to be recorded for the period 1st April to date of file, which is 22,68,000. So by sales 22,68,000. Now in this trading account, memorandum trading account, our purpose is not to find the gross profit, but our purpose is to find the stock that was actually present at the time of this fire happening. So therefore, the closing stock part is what we are going to get as a balancing figure. So if that part should be arrived as a balancing figure, which means gross profit should already be available to us. It is not available in the form of an amount, but we already have the percentage that I am going to earn by selling any number of products in this year. So, which is 22,68,000. If it is my entire sale, I am going to fetch the same 30% as my gross profit. So, therefore, my gross profit in value is going to be 6,80,400. So I have got the debit side completed and the credit side as incomplete, which means to ensure that this trading account gets tallied, the resultant figure will be nothing but stock on date of fire. Now we do not record it as closing stock because closing stock will give an indication that it is at the end of the year on 31st March. But that is not the case. We are trying to find what is the stock or what was the stock at the time this fire has occurred. So therefore we give the name stock on date of fire, and the amount is going to be amount is 4,41,300. That is my stock on date of fire. So this is ideally the stock that would have been lost at the time of the fire accident. So next step is to find the loss of stock or gross loss, we can say. That is going to be stock on date of fire. Stock on date of fire, which is 4,41,300. So ideally speaking, this is the stock that should have been lost, and this is the amount I should have got as a claim. But the trader could salvage goods costing 54,000 rupees. That means his actual loss was not to the extent of 4,41,300. This was the stock that was available with him at the time this fire occurred, but he could salvage to some extent. So salvaged stock should be reduced as that stock could be sold by this Shyam to outside customers and he could earn a profit out of it. He is going to get claim only for that portion for which he couldn't make the sale and for those portion of stock which actually has been lost to him. So 54,000 salvage stock will be reduced. So once we reduce 54,000, we can say that the actual loss of stock is 3,87,300. This is nothing but the gross loss. Why do we say it as gross loss? Because this policy had an average clause applied to it. So therefore, gross loss or gross claim, we can name it that way also. So I'll just write gross claim. So since average clause gets applied, he'll end up might not be receiving the entire amount that he actually lost. So to find out whether average clause actually gets applied, you will have to consider two things. One is the policy amount, which is 2,50,000 in this question, and 2,50,000, and also you will have to consider the insurable value, that is the amount that he should have actually insured. And insurable value for loss of stock policy is the stock on date of fire. So which in this question we have arrived in previous step as 4,41,300. So therefore the policy amount is less than insurable value and hence the policy is underinsured or stock is underinsured. And if it is underinsured, average clause gets applied. And if average clause gets applied, he will not receive the entire amount that is actually lost. Since he has underinsured, he will get to only that proportion of his actual loss. So average clause, if it gets applied, what is the net claim? So net claim is going to be the gross claim in previous case or previous step, a gross claim, or it could be loss of stock, whatever name you want to give it. So the amount from previous step, which is going to be 3,87,300, multiplied by the policy amount divided by insurable value. So this is the formula for finding out the net claim if average clause applies. And the gross claim or gross loss of stock that we have found out in previous step is 3,87,300. The policy amount was 2,50,000 and the insurable value was 4,41,300. So therefore, so we can say that the total amount that you're going to get as a claim by the insurance company is only 2,19,408.56. I'm going to round it up to nearest 1 rupee. So even though his actual losses to the extent of 3,87,300, since he had an underinsured policy, he'll get only a claim to the extent of 2,19,409 under loss of stock policy. So both May and November 2020 RTPs are complete, and they have given loss of profit in one RTP and loss of stock in one RTP. So we have actually covered both the areas from this chapter. Now, first question wasn't actually computation of claim, but this is also this is also important, as if only you know the claim under loss of profit policy and its theory, you can work out this problem. So if you already have the claim steps, please go and revisit claim for loss of profit policy. Steps under claim for loss of stock policy we have already discussed as part of question number 2. So I hope these questions are clear to you and you have understood if such a question comes, how to work it out. So all the very best to all of those who are attempting CA Inter exams. Thank you so much. Stay safe and stay happy.